Welcome to Thorgood Tax Talk.
Welcome to Thorgood Tax Talk with Shamsey Oloko. Shamsey is a seasoned attorney and founder of Thorgood Law, where he defends clients in IRS audits, enforcement actions, and complex tax disputes. I'm Sophia Morales, and today we're diving into one of the more stressful but common tax events, the audit. This episode is what to expect from an IRS audit and how to protect yourself. Welcome back, Shamsey. I'm excited to dig into this today.
Thank you, Sophia. Good to speak with you again.
Excellent. So let's start with kind of the larger issue. What kinds of things will trigger an IRS audit and who's most likely to get selected?
Well, by and large, the most common trigger for an audit is underreporting. You have income that you didn't report, and IRS's mandate is to collect as much taxes as possible. If you don't report the tax, then IRS cannot collect the money. So unreported income or underreported income, either one will get you through. And the reason why that tends to be the most trigger is if I pay you $450,000, for instance, and I tell the IRS that I paid Sophia, $450,000.
Yep. You
And
file
you-
your 1099 and
my
there you go.
1099.
Yeah.
And you don't report that income, IRS computer will flag you and say, hey, listen, go talk to Sophia. She got this much money and she didn't say anything about it. Or you intentionally or mistakenly say that you got 200 instead of 450, the computer will pick you up and say, go talk to Sophia because you need to talk to someone. So that's by far the biggest trigger
Okay.
of an audit.
Yeah, I can see where that mismatch in information would trigger something. Do they also look at, what do I want to say, high cash businesses like laundromats and those kinds of folks?
IRS also considers how worthwhile is it to send an agent that they pay X amount of dollars to go after, maybe the audit will bring in like $75? No, they want the high impact audits that will bring in the most money. So even if you have a high cash business, it doesn't necessarily mean there's something wrong. But the triggers from the computer, those are like the low hanging fruits.
Right.
Someone says, hey, I paid Sophia $450. Sophia doesn't tell us. We know if you go to Sophia, we're going to get
There's
taxed.
something there, yes.
So that's why those. Then the second tier will be, okay, you make $100,000 and you live in, Bakersfield, California, and everyone in your neighborhood that makes about 100,000, they give $200 for charity. You give 50,000.
Oh, yeah, that'd be a flag.
That would be a flag.
Yeah.
I mean, and you are not the pastor. Maybe the pastor gives half his money. It doesn't necessarily mean you did something bad, but
Right.
they just need to ask and be
Exactly.
sure that
It's just odd and they want to dig into it more.
bingo. And so if your pattern is at such odds with similarly situated people, then you get picked for an audit. So those are
Okay.
two. I mean, there's also, if someone calls and say, "Hey, listen, I know Sophia. She got some money, and she didn't, So the whistleblowers, and
Yeah,
IRS, of course, have
exactly.
a whistleblower program. Which, if I can tell the government that Sophia got money and she didn't pay taxes, IRS gets to give me a portion of that tax when they get it.
Aha. Okay.
Yeah. So that there's
There's
that.
incentive.
Yes.
So are there different types of audits and are they kind of different in their intensity?
So generally speaking, there are 4 different types of audits.
Okay.
There's what we call a correspondence audit. So you get a letter from the IRS that say, "Hey, listen, can you clarify this? 3 items, 2 items."
$50,000 charitable donation.
Yeah, something like that. Send me the receipt, send me or something, and that's done almost entirely by correspondence. You won't get a call, you won't get a visit, and they're least intrusive because they're usually looking at 1 or 2 items, and there's no reason to expand, the scope.
Beyond that. Yeah.
Then they would just, let it go. Then there's what we call an office or audit. the office audit, the IRS will invite you to the office and ask you questions about your tax return, for specific years, and then you have to answer the questions. And by the way, as you're doing this, your need for a tax professional to accompany you, to help you, increases as you go.
Yeah, I was kind of getting that impression. The first
Yeah,
one, maybe not so much. The second one, I might want someone helping me with my
to go
answers on
with
that.
you so that to modulate your responses, or better yet, to speak for you entirely.
Yeah.
Because there's a saying that if you don't say anything, you cannot see anything wrong, because you don't say anything. So it's your lawyer talking, and sometimes you say, "Oh, he said something wrong, but you didn't say it, so it's not going to be held against you." Then there's the field audit, which is when the IRS comes to you and inspect your office and your layout, your restaurant, your business, and they look at your books, the way you keep your books. If it's a restaurant, they see the cash register. Do you take all the money in, or do you keep some in your pocket? And, they want to see how this is done. Well, before I get to the last one, so the field audit can take many forms. So I'll give you as an anecdote. There was a client of mine who IRS decided to audit this person, even though it was a hybrid civil audit and a criminal audit.
Oh,
But the
wow.
IRS showed up at 5:30 in the morning
Oh,
in New York City, closed the entire street,
man.
black, with armed, officers, and broke into the office and removed the entire contents of the office and take it off to the IRS.
Wow.
Yeah.
Okay. That's
So
intense.
the pleasant end point of that exercise is we were able to successfully prevent the taxpayer from being prosecuted, from being indicted, and the case was dropped entirely. So generally, if the IRS were that aggressive at the onset, it usually does not end well, because
Yeah.
to get a warrant for that kind of exercise, the taxpayer, you have to have
Yeah.
convinced the judge that the taxpayer did something really god awful.
Right.
So
Right.
to your original question, so there's also the last type of audit. It's called the CCNP audit. It's very rare, and it's extremely intrusive. The IRS does it many times to update their records and whatever, but it's a very, very unpleasant audit. IRS will make the taxpayer go through each line item on their tax
Oh,
return and
bugger.
show, and you have to document every single thing on your tax return.
Oh, my
That,
God.
I mean, you can survive it.
Yeah, but it's a pain.
It is. You absolutely, definitely need a tax lawyer sitting beside you for that.
So, do you know which kind of audit you're facing kind of from the get go? And can these like progress from one to another to another?
So, excellent question, because the type of audit at the onset does not necessarily mean it cannot escalate, to something more. If you get a letter that says, "Hey, listen, you claimed $5,000 in charitable contribution, can you send us proof?" That's correspondence. And you send the proof, and they say, "Oh, acceptable. You did give $5,000 to your local charitable organization," and they close the file. So that's that. If it's an office or field, many times they don't fall into clean categories. It could be hybrid. And the example that I gave you, that was supposed to be a field audit, but it was a hype. I mean, you had people, IRS offices with guns drawn at 5:30 in the morning. The entire block was wondering, what the hell happened? What did you do?
Yeah. Are
Yeah,
they taking down terrorists? What's going on here?
exactly. And it was all, I mean, yeah, it was a very unpleasant. And I remember, it was in the morning, early morning. The taxpayer called me in extreme panic. Because
Sure.
imagine, and there was no hint that there was an audit going on. They just, showed up in the
Just
middle of the night.
surprise. Here we are.
Yeah, and I'm glad we were able to successfully put those fires out, and nothing happened.
Yeah, well, and I suspect probably they were able to do that because of the criminal component. You said it was a joint.
Right. So if you're going to do something that intrusive and that obvious, because also there's the element of you doing that and your reputation. People on the block, your neighbors are wondering, what the hell did you do to the government?
Yeah,
You know,
exactly.
so the government, in order to be able to conduct that kind of raid, they have to go before a judge and get a warrant. So I'm almost entirely sure because they had to arrange the taxpayer in federal court. They had to tell the judge that there was evidence of criminal conduct on the premises. If the IRS doesn't go in the way that they did,
It might
it
be
may be destroyed.
destroyed or lost. Yeah.
Yeah,
Yeah.
so but it's on the far end of likely audit, you know.
Right.
So, but it does
So, speaking of likely audit, what's the first thing you should do when you get some sort of an audit notice?
very simple. Don't panic.
Breathe.
I, yeah, just take a deep breath and then address it. Don't panic. More often than not, it's nothing. I mean, it's you said you gave $5,000 to charitable contribution. IRS says, hey, listen, can you show who you gave it to? And then sometimes it's an honest error. It's a you didn't give 5,000, it was really 500. You know, so which leads me to the second thing you should do, which is to call your tax professional. If you file a tax return that says you give $5,000 to charitable contribution, but it turns out you only gave 500, there's a way to respond to those questions without accruing for the liabilities against you. There's a
Oh,
way to do it and there's a way not to do it. And it's not by telling the truth, you know. So the second thing to do is hire a professional to go with you, preferably a tax lawyer that knows how far it can get and prevent you from getting there.
yeah, I like that. I think it's important to think about, well, was there a mistake here or am I just documenting something?
Right.
Because clearly if you've made some kind of a mistake, you want some help correcting that.
Yes, and you don't want it to be escalated.
Yeah.
Because sometimes you have an IRS agent that has like had a bad morning, and you're talking to that person, it's like you're a bad person. True story, by
Trying to
the way.
get away with stuff. Yeah,
Yeah, and
exactly.
they're like, oh no, hell, they promise you hell and brimstone and whatever. And like, listen, it's an honest error. So there's a way to deal with that. And if you do it by yourself, you may not be able to escape that guy. But if you
Yeah.
have a lawyer that goes with you, a lawyer can know. I could have a situation where I'm dealing with a belligerent agent and request to speak with a supervisor.
Yeah.
Um, I've had situations, so in these episodes, I'll be giving you anecdotes from previous, instances. I had a client once who was actually an IRS officer.
Oh, yeah.
Yeah. So the IRS officer had a real estate in New York, but for that subject tax year, they had a loss.
Hmm.
And so they claimed the loss.
Sure.
And the IRS told the officer that she's not allowed to claim the loss. Now, IRS has a policy. If you, as an IRS employee, if you lose your audit, you will be automatically fired.
Oh, no. Oh, the stakes are high on this one.
Very high. So the taxpayer could not afford to lose, that case. That's why she came to a tax lawyer right away because she
Yeah.
knew she needed to take that as far as possible, and we did. We went all the way to tax courts and got the charges dismissed.
Excellent.
If we had lost at any point in time, she would have lost her job.
Oh, that's terrible. But I
Yeah,
can sort of understand why they maybe take that stance, but that's a
yeah.
tough
It's
one.
a. I have a theory that they do that so they will have less mercy on the people that they're
On
talking
other
to.
people.
Yes. At least it seems that way. I don't know if it's an official policy, but it
Oh my
seems that way.
goodness. So, what are the common mistakes that people make in how they respond to one of these notices?
I think it's really critical that you have documentation. If you have, if you give money to your local charity and they give you a receipt, you should ask for one, get a receipt. It's better to get the receipt up front than to go back 2, 3 years later and try to remind them that you give them a bag of clothes. No, get the receipt and keep the receipt. Um, Keep it with you. And if the government comes back to ask, you should keep it at least 3 years. Because they can go back that far. You have the professional that's representing you to lean on that documentation to get you out of that jam. That I think that's very useful. And a tax lawyer would know, if that documentation is going to lead into something worse, and get you out of it as quickly as possible. Common mistakes that people make, most people, because over the years, over the last 3 decades that we've been doing this, most people are not trying to get by. I mean, they're not
Right.
trying to take advantage of the system. They're just trying to do what they think is
Do
right,
the best they
do
can
the best they
with
can.
their understanding. Yeah.
Yeah. So, and I've heard this like a zillion times. I say, "Oh no, my CPA filled that form out. I didn't." And I always point to the taxpayer. There's a section in every tax form. It's called the jurat. The jurat says, under penalty of perjury, I, Billy Bob, represent that all the information here is true, complete, blah blah blah
And
blah blah blah, blah.
accurate. Yeah.
And you sign. There's no room that maybe your tax preparer, batch things or said the wrong thing. No, it's you. You're responsible for that. So that's one thing that I see, common, and people think, oh, I'll just tell them the facts. I didn't do it. My preparer, filled the form out. And I've been seeing this for the last 30 years. Many people go to the preparer, and the preparer says, oh, here's your tax return. You sign it, you send it back. And the IRS now writes, or the states, and says, hey, listen, you claim a business loss. And I'll say to the taxpayer, what kind of business do you do? You're a W 2 person. And it's news to them. Like,
Yeah.
I
What,
have
what
a
are you
business.
talking about?
Yeah.
Yeah.
And I said, well, your tax return says you have a business. I said, oh, no, I didn't. Well, it says you do. And if you told the government that you do have a business and you were lying, that's a different problem.
Yeah, it is.
So that you have to go into a crisis management mode and we had one that we're processing as we speak. We have to deal with the states, with the IRS. Oftentimes, file an amendment, come out of that position, and say, hey, listen, no, 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 I do not have any business. That was an error. Let's just, amend it and move forward.
Yeah,
So
exactly.
that happens a lot. A
Yeah,
lot.
I had one of those happen with my CPA a few years back. Fortunately, they're registered agents and kind of have that inside track, which is helpful. And so they were able to go, oh, nope, our bad. We filled in the wrong number. We'll just fix it.
Yeah, and the government is quite aware that there's some, scrupulous, preparers that do these things. And,
Hmm.
many
Yeah.
times they'll just, they'll let you go.
So, what's the difference between having a CPA represent you and having a tax attorney during an audit?
I think that's an excellent question, Sophia, because substantially it's the scope of knowledge that a tax lawyer will have versus a CPA. And that implicates how far they can take your case. If I'm doing a field audit or an office audit and I'm talking to an agent, that agent knows, one, that I'm a tax lawyer. I get my understanding of the tax law from the code itself. The code is a legal document, it's a statute.
Yeah.
And generally, only lawyers can read statute and understand it. But most importantly, that agent knows that I can take the case all the way to tax court without having to refer to somebody else. That makes a lot of difference with the agent, and
Yeah,
makes a lot of
because it'll
difference.
happen a whole lot faster.
Yes, and because there's some positions the IRS can take if they think it's going to stop at appeals. But if they know that you're going to go beyond appeals, so appeals is, I mean, generally outside of the IRS, it's supposed to be an independent,
Right.
party to the IRS. But I can take it even beyond appeals and go to tax court and insist. And I know the level of exposure that the IRS has at the tax court. Because if I take a set of facts to the tax court and I win, that has
Now you set
implications.
a new precedent.
Thank you very much. That's it, right there. So that makes a big difference in when the agent is talking to a CPA or tax lawyer.
Yeah.
That's the
Okay.
biggest.
Yeah, that is awesome. Well, thank you for sharing your wisdom with us today. I really appreciate it.
Thank you. I'm really glad to be able to do that.
So if you're facing an audit or just want to get ahead of one, head to thorogoodlaw.com for resources and legal support. Shamsey and his team are here to help you protect your future and get clarity in the chaos. And make sure to subscribe for more tax insights from Thorgood Tax Law. And make sure to leave a review and share this with anyone you know who's struggling with these issues.
Thank you again, Sophia. I really appreciate your time and pleased to be here.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.